Hey guys, hope you are all having a great weekend. Today I want to go over some key points that are important for you guys to know and keep refreshed as we are about to start another week. We will talk about a myriad of topics but also keep it super easy to follow. It's still Sunday, and after yesterday's big video, I do not want to throw a barrage of terms and complications down your way. We are going to revisit some previously discussed topics to refresh as well. Then we are going to discuss a little bit of where it is probable that we might head into this week and wrap things up real quick. It is super important for you guys to stick around because we will discuss three topics that are immediately essential for you to know. Before we start, let me make the disclosure that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. I want to thank all my Patreons and one-time donors, who continue to carry this channel. With that out of the way, let's get started. Let's begin with the exciting news that came out yesterday that had everyone raving about. I was tagged numerously to articles covering the news that apparently Citadel is planning to redeem roughly $500 million out of the $2 billion they had injected into Melvin Capital Management. For those unaware, Melvin was essentially saved, which is a funny term that I will explain in a minute, by Citadel after they lost billions of dollars on short positions. The articles source the information to people familiar with the matter, rather than proper documentation, which sort of raised my eyebrows and was the reason why I decided not to talk about it in yesterday's video. Citadel and Point 72 came together to invest $2.75 billion into Melvin back on January after Melvin were caught with their pants dropped by a bunch of retail investors rallying to buy meme stocks. The investment came at the cost of having the two firms receive non-controlling revenue shares in Melvin for 3 years while also attaining a share in the management of the company and performance fees that Melvin collects from its clients. However, Citadel nor Point 72 get any control over Melvin. Now, let's discuss this a little more in detail, because this is certainly nothing to celebrate. This is not some victorious punch from retail as everyone has been screaming. First of all, the fact that the source of this article comes from insiders makes me feel a little weird about it all. I am not speculating as to the validity of the claim, but rather the intention and timing of releasing such sensitive information. I highly doubt that Citadel is having liquidity problems at all, as many have speculated. It makes no sense at all. In fact, the fact that we have not seen smaller-sized hedge funds get margin called yet confirms to me that Citadel themselves are definitely not running on out of money. As I have said before, what I think Citadel has a great inflow of cash to deal with the growing problems without causing it all to collapse. They know how to play the system and they do it very well. They can keep kicking the can down the road until a much greater force comes down and flips everything on its head. That is when I think we start seeing smaller banks followed by smaller hedge funds fall. Once the number of bankrupt financial institutions start growing, that is when things will start to get dire for Citadel, because it becomes a lot more serious to maintain sustainability of their own short positions. I think many people with larger following are leading crowds to believe that the squeeze can happen relatively easy, as if too many margin calls will randomly show up one day and cause Citadel to start bleeding and then boom, we have a squeeze. It is a lot more complex than this, and it irritates me that so many creators and people say this to appease to the crowds for clout and internet points. People, let me break the rather harsh reality for you. Are we going to squeeze? Absolutely. These levels are non-sustainable infinitely. When will we squeeze? I strongly believe upon a market crash that becomes more apparent every day and harder to deny as everything in the economy is screaming code red. How will the squeeze happen? It is impossible to tell, but it is not a three-step kind of thing as people want it to be. There is a difference between reality and what we would like things to be. Take a look at all the events that took place for the market crash to happen back in 2008 and tell me if you then think it's that easy for us to cause a squeeze. This will take time, because there are so many factors playing into this that it is honestly impossible to predict the series of steps things will happen even when we know the outcome of it all. One thing that nobody is talking about is how are other countries and economies doing. If we know what we know, don't you think China or Russia or even European nations are taking steps to see how they can become profitable? I keep hearing that China is readying themselves for something big, and I have no doubt that due to the sheer power of their markets, they will influence a lot of how things go and proceed in anticipation to the squeeze, during the squeeze and post the squeeze. The squeeze that we honestly cannot really prepare for aside from adding shares and taking cautionary steps to ensure we are backed by platforms that will treat us correct. I am looking at you, Robinhood. Back to the article. I find it super weird this is coming out the way it is and at this time. We know we put Melvin in some serious issues, and this investment that came from Citadel and Point 72 did not come from a good place in their hearts. We have talked a lot on this channel about how aggressively and psychopathic the nature of business is on Wall Street. Everyone is looking to devour each other because everything is a zero-sum game for them. They will backstab each other for any small benefit that can be produced. The fact that they came in running to save poor old Melvin indicates to me that the fall of Melvin could have come at a serious cause to them, possibly causing a squeeze back in January. We know a lot of these companies have a little fraternity, or I should say an exchange called MEMX, and they work and perform trades and systems that are not yet encompassed by regulating guidelines so they can continue to enjoy the benefits of manipulating the entire economic sector. They came to save Melvin because the cost of not doing so came at the very expense of losing the game completely. Citadel redeeming $500 million from Melvin could indicate that Melvin is slowly patching themselves up to a point where they could potentially operate successfully and can more independently in the near future. It could mean many things, and none of them take away the squeeze. I just don't feel we have anything to truly gain from this, and it is also not a sign of a victorious accomplishment. As such, I remain skeptical about the why and the when of this article. Why did it come at all, and why is it happening now? One question that runs through everyone's minds is why is all of this allowed to happen? Why the government allows such egregious malice to saturate the soil where the foundations of the free world stand? We know the government stands to benefit very little as the growing tumor that are these companies continue to grow, eroding capital and balance across the economy. I have no doubt they intend to monopolize the entire financial sector through systematically avoiding regulations, but is not even the problem. The issue lies in the government's complacency to adapt and make new regulation that takes account of all the advancements in technology so that it can protect and create an environment that is lucrative for everyone and not a select few. Why isn't the government involving themselves? The answer to this has been hinted in many of my videos, with a huge video I made once called "The Fed as an Ape." I believe the government and different bodies around the economy are slowly biding their time and waiting for everything to come down so that they can sort of restart things. If you provide maintenance for an asset or system, over time that asset or system will break down even with proper maintenance. As such, the best outcome to resolve this issue comes by a replacement of such asset or systems. I think the government, the Fed, and most importantly certain privatized figures like BlackRock stand to gain in every aspect from the collapse of some of the banks and hedge funds. That is not to say that I think BlackRock is a good company or that the Fed is our best friend, but rather that their intentions and motivations mirror ours, even when the path ahead of everything diverges for everyone in the end. In that video among subsequent ones, I explained as to why the government and certain institutions want and need the entire system to come down. You see, the harsh reality that nobody wants to admit is that none of these hedge funds or banks or individuals that we bet against have done anything outrageously illegal. We often see tweets and comments touting jail, but under what cause? Nothing they do outright is wrong, and what they do wrong is almost impossible to prove because they have a system that lets them hide their nefarious trades in a manner that is legal. They simply are playing the game to their advantage, and there isn't a law that outlines this as illegal. As such, as a way to replace what is happening, by letting them consume themselves out of existence by causing a market crash, the government will then be able to assess the situation and make laws that are more adept, updated and take into account modern market dynamics. I think the Fed along with the SEC and other institutions like BlackRock are simply playing the long game on this. They play out positions based on what is ahead of the curve, and not on the day-to-day like most of us do. We look at the daily charts of GameStop and AMC only to disappoint ourselves with a lack of linear progression because even though we know we will trade downwards or neutral on some days, we have to feed our need of existential purpose by using this as fuel. Behaviorally speaking, this is a bit like a vicious cycle, which is why I always tell you guys to quit looking at the charts as proof to the outcome you want. Charts provide simply buying opportunities for people who want to buy cheaper, and that is all they will ever do. Going up and down will get boring with time, and you will experience frustration the longer you allow yourself to linger in that cycle we talked about. Everyone that is big is buying into GameStop and AMC. I have no doubt other countries and economies are buying into hedge positions to also benefit from this. Big money is speaking very loudly, yet we go the daily morning hours every day to find an excuse to be bitter and yell at our government to do better. They are all playing the long game because playing it short will not produce anything worth a penny for them. I hope these 3 little topics serve to give you some perspective. Listen, I know it can get boring and that it gets frustrating that we are not being treated with the dignity and respect we should expect. The lack of transparency in the markets is one of the biggest concerns we should have as a collective society. I have no doubt that as time goes by, you will see the media begin to blur the lines, bring politics and conflict among us by dividing and conquering. Be prepared to leave and abandon many of the postures and assumptions we have. The reason why GME and AMC are strong is because they bring us all together. This represents a huge risk for those powers that be. Forget about who voted for who or who thinks we should be doing with our bodies or our taxes. They will hit hard with this the closer we get to the squeeze because things will begin to get really unstable for them, and once an animal gets cornered, it gets more aggressive and dangerous. I like GameStop and I like AMC. I know there are other stocks that will squeeze too, but by far these 2 are my favorite. Buy what you want. I am not here to daddy you into what I think is right for you. I simply shepherd my own opinions and aim to increase my awareness of everything going on while simultaneously sharing it with you guys. Do what you think is best. I think buying and holding GameStop and AMC are a ticket to much more than Lambo Town. I don't think they will necessarily fix problems, but rather give us a reset to the issues that have been devastating people across the entire globe. Let's wrap up things and talk about tomorrow. However, do let me know what you think of this. Please do not resign yourself to the sidelines and continue to be quiet. I want you to be loud and express your opinions. The only one that benefits from the crowds being silent are hedge funds and their bots which take over the public space. Open those thoughts to express them. Be respectful though, and allow yourself to agree to disagree with others. I strongly believe AMC is in an ascending triangle at the moment. The stock hit a low at 28.50 a couple weeks ago and then a high around 38.70. The stock has been making progressive steps over the longer time frame, slowly increasing the support over time and creating pressure to break above the resistance at 38.70. This week is more likely to see the end of this triangle pattern, and a breakout is imminent, though it could carry over to next week. We currently have support at 32.60, with even more support at 29. We currently have resistance at 34.41, and at 36.18 before that huge wall at 38.70. Monday will be interesting, especially since we had a bit of a surge last Friday. If we drop, we could hit 32.72 as a quick support. If we break past 34.41, we are likely to test 36.18. GameStop is even trickier. GameStop was in a bullish wedge. The stock broke support and fell back to 150.78. After that, GameStop started moving up. However, that bounce is only for one day. It could be that this low might simply be a small retracement to an otherwise bullish ascension. GameStop has support at 155 and 150. It should bounce on each if tested, unless vertically dipped by an attack. The stock faces resistance at 159, but even more at 165. If we break 159, and build support above it, then we should easily test 165. If not, we could fall back and trade between 155 and 160. And that is all I have to say today. Please give me feedback and tell me what you think about the topics we discussed. Does this make sense? I wanted to refresh today on some stuff and give you guys some perspective because I sense that expectations are being driven by hype and not grounded facts and probabilities. Please share the video with other fellow investors if you found it helpful. Thank you to all my donators and pledge supporters on Patreon. I don't get paid much by YouTube because they hate bot channels, so you guys are literally paying my bills and efforts. There is not a lot of you, but to the few ones out there, thank you so much. I really appreciate the love and support you provide. With that said, I will see you tomorrow, so enjoy the rest of your day and to the moon.